Hey everyone, it's Emma Chamberlain, and welcome back to Infographics. I want to ask you something. Have you ever woken up and just felt like the world is running on some kind of hidden software that nobody ever explained to you? Like, gas prices go up and nobody can tell you why. Wars start in places you've never heard of. Your rent increases, your grocery bill doubles, and the news just says inflation, or supply chain issues, or geopolitical tensions. But nobody actually explains the machine underneath all of it. Well, today, I'm going to show you that machine. It's called the petrodollar system, and once you understand it, you will never look at the world the same way again. Let me start with a story. In 1973, a woman in Ohio named Margaret drove to her local gas station. She was a school teacher. She had 3 kids in the back seat. She needed to get to work and then to the grocery store. But when she pulled up to the pump, there was a handwritten sign taped to the window. It said, "No gas today." She drove to another station. Same sign. Another. Same thing. By the end of the day, she had visited 12 gas stations. Every single one was empty. That wasn't just happening in Ohio. It was happening in California, New York, Texas, Florida, everywhere. People started fighting at pumps. Some stations were charging 5 times the normal price. The government had to ration gasoline. You could only buy on certain days depending on your license plate number. That crisis was called the 1973 oil embargo. And out of that chaos, the United States and Saudi Arabia created a deal that would shape the next 50 years of global power. That deal is the petrodollar system. But before we go any further, we have to answer a basic question. Why is oil so important? I mean, we all know we put it in our cars, but it's so much bigger than that. Think about everything you touch today. Your phone, the case is plastic made from oil. Your clothes, polyester, nylon, acrylic, all made from oil. Your shoes, the soles are synthetic rubber from oil. The medicine in your bathroom cabinet, many pills are coated with petroleum-based film. The fertilizer that grew your breakfast, made from natural gas and oil byproducts. The roads you drove on, asphalt is literally the bottom of the oil barrel. The plane that flew your Amazon package across the ocean, jet fuel. The cargo ship that brought your furniture from China, heavy fuel oil. The heating in your home if you live in the Northeast, heating oil. Even the solar panels that people think are completely green, they require petroleum-based lubricants and plastics during manufacturing. Oil is not just fuel. Oil is the backbone of everything. The International Energy Agency says the world consumes about 100 million barrels of oil every single day. That's enough to fill 6.3 million Olympic swimming pools per year. Every barrel contains 42 gallons. Do the math. That's 4.2 billion gallons per day. Every day, without interruption. If oil stopped flowing for just 1 month, modern civilization would collapse. Hospitals would lose backup generators. Grocery stores would run out of food within 3 days. Police and fire trucks couldn't respond. The internet would die because data centers run on diesel generators. It's not an exaggeration to say that oil is the blood of the global economy. So if oil is that important, then whoever controls the money used to buy oil controls the world. And for the last 50 years, that money has been the US dollar. But how did that happen? To understand that, we need to go back to the end of World War II. In 1944, the war was still raging in Europe and the Pacific, but the Allied nations knew they had to plan for peace. So 730 delegates from 44 countries met in a small town in New Hampshire called Bretton Woods. The meeting lasted 3 weeks, and at that meeting, they built a brand new global financial system. Here's what they decided. The United States would hold most of the world's gold. At the time, the US had about 20,000 tons of gold, the largest stockpile in history. Every other country would tie their currency to the US dollar at a fixed exchange rate. And the United States would promise to exchange dollars for gold at $35 per ounce, anytime, no questions asked. That system was called the Bretton Woods system. For about 25 years, it worked beautifully. Global trade exploded. Europe rebuilt. Japan became an economic miracle. The dollar became known as good as gold. But then came the 1960s. The United States started spending enormous amounts of money on two things: the Vietnam War and President Lyndon Johnson's Great Society programs. To pay for all of that, the US simply printed more dollars. Other countries noticed. They started to worry that there wasn't enough gold in Fort Knox to back all those new dollars. French President Charles de Gaulle was the loudest critic. He sent French warships to New York Harbor to pick up gold and bring it back to France. Other countries started doing the same thing. By 1971, the situation was desperate. President Richard Nixon knew the system was about to collapse. So on August 15, 1971, he went on live television and made an announcement that shocked the world. He said the United States would no longer exchange dollars for gold. He closed the gold window permanently. That event is called the Nixon shock, and it ended the Bretton Woods system overnight. Suddenly, the dollar was fiat money. Fiat currency is money that has value only because people trust it. It's not backed by gold or silver or anything physical. It's backed by confidence, and confidence is fragile. Most economists predicted the dollar would collapse. They said, without gold, nobody will want dollars anymore. For the next 2 years, it looked like they might be right. Inflation spiked. The dollar lost a third of its value against other currencies. The world was in financial chaos. And then came 1973. On October 6, Egypt and Syria launched a surprise attack on Israel. That was the Yom Kippur War. The United States airlifted massive amounts of weapons to Israel. In response, Arab oil producers, led by Saudi Arabia, announced an oil embargo. They would not sell oil to the United States or any country that supported Israel. The embargo lasted 5 months. During that time, oil prices quadrupled, from $3 per barrel to $12 per barrel. In today's dollars, that's like gasoline going from $3 to $12 per gallon overnight. Gas stations ran dry, airlines canceled flights, factories shut down, unemployment went up, inflation went even higher. The US economy went into a deep recession. The United States needed a solution, and that solution came in the form of a secret deal with Saudi Arabia. Here's what happened behind closed doors. In 1974, US Secretary of State Henry Kissinger flew to Saudi Arabia for meetings with King Faisal. The deal they negotiated was simple but brilliant. The United States would sell Saudi Arabia advanced military equipment, F-15 fighter jets, M-60 tanks, air defense systems, training, intelligence sharing, and a formal commitment to defend Saudi Arabia from external threats like Iran and Iraq. In return, Saudi Arabia would agree to two things. First, it would sell all of its oil exclusively in US dollars, no other currency. Second, it would take the dollars it earned from oil sales and invest most of them in US government bonds, which is essentially loaning money back to the United States. This deal was the birth of the Petrodollar system. And because Saudi Arabia was the largest producer in OPEC, the Organization of Petroleum Exporting Countries, the other members quickly followed. Kuwait, the United Arab Emirates, Qatar, Iraq, and later others all agreed to price and sell their oil in dollars. Even non-OPEC producers like Russia and Mexico eventually adopted dollar pricing because the market demanded it. Now let's talk about why this system is so powerful. It creates what economists call a virtuous cycle for the United States. Step 1. Every country in the world needs oil. Step 2. Almost all oil is sold in US dollars. Step 3. Therefore, every country in the world needs to hold US dollars. That's not optional, that's a requirement. Think about a country like Japan. Japan is the third largest economy in the world, but Japan produces almost no oil. It imports nearly all of its oil from the Middle East. To buy that oil, Japan must first acquire US dollars. How does Japan get dollars? It has to sell cars, electronics, machinery, and other goods to the United States. Or it has to borrow dollars from international banks. Or it has to hold US Treasury bonds as reserves. One way or another, Japan is forced to participate in the US economy and support the dollar. Now think about a country like Germany. Germany is the largest economy in Europe. It also produces very little oil. So Germany must also acquire dollars to buy oil. Germany sells luxury cars, industrial machinery, and chemicals to the US. It holds dollars in its central bank. It invests in US assets. Even though Germany is a close ally, it is still economically tied to the dollar. Now think about a country like China. China is the world's largest oil importer. It buys more oil than any other country. China has enormous trade surpluses with the United States, meaning it sells far more to the US than it buys. That gives China a lot of dollars. And what does China do with those dollars? It buys US Treasury bonds. China currently holds about $800 billion in US government debt. Many people think China wants to destroy the dollar, but the truth is more complicated. China is trapped. If China dumped all its dollars tomorrow, it would lose billions of dollars in value. It would also make it harder to buy oil. So China plays a careful game, criticizing the dollar while still relying on it. This global demand for dollars gives the United States incredible advantages. First, it keeps the US dollar artificially strong. A strong dollar means Americans can buy imported goods cheaply. It means US tourists pay less when they travel abroad. It means American companies can borrow at low interest rates. Second, it allows the US government to run massive budget deficits without facing a currency crisis. The US can borrow money at lower interest rates than almost any other country because investors are desperate to hold dollars. Third, it gives the US enormous leverage through financial sanctions. The US can kick banks off the SWIFT system. It can freeze foreign assets. It can block dollar transactions. Countries like Iran, Russia, and North Korea have all been hurt by these tools. That's not because the US is cruel. It's because the US designed the system. But wait, there's another side to this story. What happens to all those dollars once oil producers earn them? They get recycled back into the global financial system. That's called petrodollar recycling. Here's how it works. Saudi Arabia earns about $300 billion per year from oil exports. Almost all of that is in dollars. Saudi Arabia doesn't need all those dollars immediately, so it invests them. It buys US Treasury bonds. It buys shares in American companies like Apple, Microsoft, Amazon, and JP Morgan Chase. It buys real estate in Manhattan, Los Angeles, and Washington, D.C. It invests in global stock markets, hedge funds, and private equity. Some of those dollars also flow to other countries. For example, Saudi Arabia might pay Egypt or Jordan for construction projects, sending dollars to those countries. Those countries then need to use dollars to buy food, medicine, or weapons. Eventually, most of those dollars come back to the United States through investments or trade. That loop, from oil buyer to oil producer, back to US assets, makes the dollar even stronger. It's a self-reinforcing cycle. So that's the petrodollar system. It's been running for 50 years. But now cracks are starting to appear. In recent years, several countries have tried to reduce their dependence on the dollar. Russia has been the most aggressive. After the US imposed sanctions following Russia's invasion of Crimea in 2014, and again after the 2022 invasion of Ukraine, Russia started selling oil to China and India in currencies other than dollars, mainly yuan, rupees, and rubles. Russia also dramatically reduced its holdings of US Treasury bonds. In 2010, Russia held about $200 billion in US debt. Today, it holds less than $5 billion. China has also been making moves. China launched yuan-denominated oil futures on the Shanghai International Energy Exchange in 2018. That means oil producers can now sell oil for yuan instead of dollars. China has also been encouraging its trading partners to settle transactions in yuan. Brazil, for example, has agreed to accept yuan for some exports to China. Argentina has done the same. And China has been building massive gold reserves, over 2,000 tons of gold, to back up the yuan in case the dollar system collapses. India, the world's third largest oil importer, has also experimented with non-dollar oil trades. India bought Russian oil at a discount and paid in dirhams and rupees. Pakistan has tried similar arrangements. And then there's BRICS. BRICS is the group of major emerging economies: Brazil, Russia, India, China, South Africa. In 2023, the group expanded to include Iran, Egypt, Ethiopia, and the United Arab Emirates. BRICS has openly discussed creating a new common currency to challenge the dollar. The idea is still in early stages, but it shows how serious these countries are about reducing dollar dependence. So, is the petrodollar system dying? The short answer is no, but it is changing. Here's why it's not dying anytime soon. First, switching currencies is incredibly hard. It's not like deciding to use euros instead of dollars at a tourist shop. We're talking about trillions of dollars in existing contracts. Hundreds of thousands of lawyers, accountants, bankers, and traders who have built their entire careers around dollar-based oil trading. Entire financial systems, from derivatives markets to insurance to shipping, are calibrated to the dollar. Changing that would take decades. Second, the dollar has something that no other currency has: liquidity. Liquidity just means you can move huge amounts of money without crashing the market. The US Treasury bond market is the deepest, most liquid market in the history of the world. You can sell $10 billion in Treasury bonds in an afternoon without moving the price much. Can you do that with Chinese government bonds? Absolutely not. China's bond market is smaller, less transparent, and more controlled. Same with the euro, same with the rupee. Third, trust. Believe it or not, despite all its problems, the US political system is still more stable and more predictable than China's or Russia's. US courts enforce contracts. US property rights are relatively strong. The Federal Reserve is independent. No other country offers that combination of stability, size, and rule of law. So what's the realistic future? Not a sudden collapse, not a revolutionary replacement. Instead, what we're likely to see is a slow, gradual erosion of the dollar's dominance. The dollar might go from 60% of global reserves today to 50% in 10 years, then 40% in 20 years. The yuan might grow from 2% to 5% to 10%. Gold might become more important. Cryptocurrencies? Probably not for oil trading. Too volatile, too slow, too energy intensive. But perhaps a digital yuan or a digital euro could play a role. But here's the most important thing to understand. The petrodollar system is not just about money. It's about power. It's about who gets to set the rules. It's about which country can impose sanctions, which country can borrow cheaply, which country gets to have the world's reserve currency. For 50 years, that country has been the United States, and the US is not going to give that up without a fight. China and Russia know this. That's why they're not trying to destroy the petrodollar overnight. They're trying to build alternatives. They're trying to create their own financial systems, like China's cross-border interbank payment system, called CIPS. They're trying to stockpile gold. They're trying to sign bilateral trade agreements in local currencies. They're playing the long game, and the US is playing defense. So what does this mean for you? If you're watching this, you're probably not a central banker or an oil trader. But the petrodollar affects your life every single day. When the dollar is strong, your imported goods are cheaper, but American exports are more expensive, which can cost jobs. When the dollar is weak, inflation can go up, but American manufacturing gets a boost. When the US sanctions another country, energy prices can spike, which hits you at the pump. And if the petrodollar system ever really cracks, the global recession that follows would affect everyone. Your job, your savings, your rent, your food. That's why understanding the petrodollar isn't just for economists. It's for anyone who wants to see the world clearly. The machine underneath the floorboards is real. It's made of oil, dollars, and 50 years of deals. And now you know how it works. Thanks for watching Infographics. I'm Emma Chamberlain. Stay curious, ask hard questions, and I'll see you in the next video.